Assalamualaikum warahmatullahi wabarakatuh. I am Mohamad FARDAUS by ZAMZURI. Will explain question 1. Goodwill or bargain purchase on acquisition of Big Berhad, Excel Berhad and Good Berhad. For Big Berhad, Great Berhad acquired 75% of ordinary share from Big Berhad. So the consideration transferred is 960 million. And it will be added with non-controlling interest, which is 25%, times with fair value asset on date of acquisition, and we get 314.5 million. And we need to minus both of them with the fair value net asset at the date of acquisition, which consists of ordinary share capital, return profit, and also asset revaluation reserve. So we get goodwill is 16.5. And as stated in the equation is there is impairment for goodwill, which is 10%. So we get 1.65, and the goodwill for Big Berhad is 14.85 million. Next, calculation for the goodwill of Excel Berhad. We start with consideration transferred, as Great Berhad acquired 60% of the share in Excel Berhad. So we get 322.5 million, and we need to add with the non-controlling interest portion, which is 40%, times with fair value asset, and we get 196.8 million. And both of them we need to minus with a fair value net asset at the date of acquisition, which is 492 million, and we get goodwill 27.3 for the Excel Berhad. Next, calculation of goodwill for Good Berhad. A Big Berhad acquired Good Berhad, so it means that Great Berhad has an indirect relationship with the Good Berhad. So we get the indirect consideration transferred, 180 million times with 75%, and we get 135 million. And we need to add with the non-controlling interest portion, 40%, which we get 69.48 million. And the total both of them is 204.48 million. And we need to minus with fair value net asset at the date of acquisition, consists of ownership capital, return profit, and also asset revaluation reserve. And the total for goodwill of Good Berhad is 30.78 million. Next is question 1b, which requires us to calculate gain or losses that are arising from the second acquisition of shares in Excel Berhad. In the question, it stated that acquisition is happened on 1st January 2021 and give rise of shares in 20%. So we start with the consideration transferred to Excel Berhad amounted 67.2 million, and we find first the fair value of net asset, which consists of ordinary share capital 300 million, return profit 119.4 million, and ARR 75 million. So we get total 494.4 million, and we multiply with a rise of shares, which is 20%, and we get 98.8 million. And we minus consideration transferred with the 98.8 million, and we get the rise in gain of second acquisition amount 31.68 million.
Assalamualaikum, my name is Mohamad ZIKRI. After applying the adjustment, we found that the gross profit of Great Berhad Group is 310 of 10.5 million. The profit after tax is 152.12 million, and the total comprehensive income is 208.5 million. After we found profit after tax and total comprehensive income, we need to know the amount of holding company and non-controlling interest in both profit after tax and total comprehensive income. To get non-controlling interest in profit after tax, we must follow the working one. In working one, we can see that the profit after tax for Big Berhad is 24.45 million, Excel Berhad 8.4 million, and Good Berhad is 10.92 million. So the total of NCI is 43.77 million. To get the holding company amount, we must minus 152.12 with 43.77 and we will get 108.35 million. For NCI total comprehensive income, we need to 0.7 times with 40% and plus it with 43.77 million and we will get 44.05 million for NCI. For holding company, we use same method as before by minus 208.5 with 44.05 and we will get 164.45 million for holding company. For statement of changes in equity, we need to find the return profit beginning of the year. So to find it, we must follow the working tool. As you can see, the group return profit is 602.34 million. For non-controlling interest, it is 772.86 million. After we found that, we will get the total return profit in the end of the year for GRP is 650.69 and for non-controlling interest is 720.01. By applying all the working in the consolidated statement of financial position, we can find out that our consolidated statement of financial position is balanced. The total net asset and total equity and liabilities is 6,532.8 million. That's all from me. Thank you.
Assalamualaikum and hi, my name is AKMAL behind AZAM. So I will present question 2. The question is, as a group of accountants, discuss your opinion on Nel Berhad, Shinji Berhad and FNE Berhad with reference to the relevant MFRS, which is MFRS 10 Consolidated Financial Statements and MFRS 11 Joint Arrangements. So according to MFRS 10, an investor that holds more than 50% or more than half of voting rights of an investee has the power where the relevant activities are directed by vote of the holder of the majority of the voting rights or a majority of the members the governing body that direct the relevant activities are appointed by a vote of the holder of the majority of the voting rights. So here Nel Berhad and Shinji Berhad have 50% control over the company, over the FNE Berhad. So they are required to prepare consolidated financial statements as they are considered as holding company for the FNE Berhad. So for MFRS 11, according to the MFRS 11 joint agreement, is an arrangement which two or more parties have joint control. So in order for the company to be considered as a joint agreement, there are characteristics that must be exist, which are: first, parties are bound by a contractual arrangement. Second, the contractual arrangement give two or more parties joint control of arrangement. And also, contractual arrangement can be evidenced by writing or by statutory mechanisms. An enforceable contractual arrangement is often, but not always, in writing. But it is usually in a form of contract or documented discussions between the parties. So for statutory mechanisms, statutory mechanisms can also create enforceable arrangement either on their own or in conjunction with contracts between parties. Okay, for this question, we can find that there is no contractual agreement between Nel Berhad and Shinji Berhad. So there are also no joint arrangement between them, and also no joint control between them, because since they have not contractually agreed to make a collective decision on any of the activities of F&E Berhad. Then only Nel Berhad has control over F&E Berhad. It is implied that the arrangement is controlled by a single party. Neither Nel Berhad nor Shinji Berhad are acting in concert to command the activities, which means neither Shinji Berhad nor Nel Berhad are functioning jointly to direct the activities. Even though it seems like they have control over F&E Berhad, but there is no proof that they have created contractual arrangement within them that we can find it in the question. So it is pointless where only with the existence of contractual arrangement, a contractual agreement will give joint control to them, referred to Nel Berhad and Shinji Berhad. Okay, now we move to question 3A. The question is discuss the accounting treatment of Candle's acquisition on 1st January 2018. So the acquisition of Candle Berhad should be considered as the subsidiary company of Hendrik Berhad, since they had control, Hendrik Berhad had control through acquiring 80% of the equity share capital of Candle Berhad. According to MFRS 10, an investor controls an investee if it is exposed or has rights to variable returns from its investment with the investee, and the company has the authority to influence those returns through its control over the investee. Okay, so now we will look to the table in the slide. We have calculated the goodwill. We get the goodwill amounted to 6.2 million ringgit, and this amount should be included in consolidated statement of financial position as current asset. Now we look to the consideration transferred. We get amounting to 27 million, and this figure also need to be recognized in the CASOFP as ordinary share capital, since Hendrik Berhad acquired Candle Berhad by issuing 3 for every 2 shares in Candle Berhad. So how we get the amount of 27 million? We get this amount by 80% times with the 15 million times with 3/2 times 1 ringgit and 50 cents. So we get the amount 27 million. Next, we look to the non-controlled interest of Candle Berhad. We get the amount of 5.2 million, and it should be recognized in CSOFP also as current liability. We get this amount by multiplying 25% multiply with the FVNA at date of acquisition, which is 26 million. So we get the amount of 5.2 million. Last but not least, surplus of Candle Berhad's lands amounted to 1.5 million ringgit, should be included in the consolidated statement of financial position also as increase in property, plant and equipment. I think that's all from me. I will pass it to Johan. Thank you very much.
Assalamualaikum warahmatullahi wabarakatuh. My name is Mohamad Johan bin FIRDAUS. Okay, next let's proceed with question 3B. Calculate the gain or loss on the disposal of the share for Hendrik Berhad. Okay, let's look on the note on remaining goodwill. The consideration transferred plus non-controlling interest minus fair value net asset, and then minus impairment, and you will get remaining goodwill of 5,400,000. After calculate the remaining goodwill, you can calculate the gain or loss on disposal of the share for Hendrik Berhad. Okay, first the proceed, which is 26 million. Plus with fair value of shares retained 10 million, and then minus with fair value net asset on 30 June 2020 24,800,000, and then deduct with the remaining goodwill of 5,400,000, and you will get gain on the disposal of the share for Hendrik Berhad is equals to 5,800,000. Okay, next for question 3C, discuss the effect of implementing the plan on the group's financial statement as at 31 December 2021. After the disposal, the ownership interest of Hendrik Berhad in Kendal Berhad is 12%. Hendrik Berhad have lost control of Kendal Berhad since it holds less than 20% equity share capital of Kendal Berhad. The relationship between Kendal Berhad and Hendrik Berhad has changed from subsidiary to simple investing relationship. There is no percentage of NCI because Kendal Berhad is no longer recognized as a subsidiary of Hendrik Berhad. Gain of 5,800,000 taken to the consolidated statement of profit or loss for the year ended 31 December 2021. Then, remaining goodwill of 5,400,000 will be written off against gain or loss on the disposal in the consolidated statement of financial position as at 31 December 2021. On 31 December 2021, Hendrik Berhad shall exclude Kendal Berhad from the Hendrik Berhad group and treat Kendal Berhad as a normal investee. Okay, there is no equity statement and consolidated financial statements for Kendal Berhad. Hendrik Berhad will only record dividend income from Kendal Berhad based on the percentage of control in Kendal Berhad. Okay, last question, question 4. Explain the relationship between Platinum Berhad and Sandy Berhad with reference to MFRS 128 investment in associates and joint ventures. According to MFRS 128, an associate is an entity over which the investor has significant influence. Significant influence is the ability to participate in the investee's financial and operating policy decisions, but it is not control or joint control. If an entity holds directly or indirectly 20% or more of the voting power of the investee, it is presumed that the entity has significant influence. Since Plankton acquired ordinary share capital from Sandy Berhad, Plankton has the right to vote during the annual grand meeting and owns 25% of the voting power. As accordance to MFRS 128, the existence of significant influence by an entity is usually evidenced in one or more of the following ways. Okay, A, representation on the board of directors or equivalent governing body of the investee. B, participation in policy-making processes, including participation in decisions about dividends or other distributions. Okay, C, material transactions between the entity and its investee. D, interchange of managerial personnel. Or E, provision of essential technical information. In this case, Plankton had the right to participate in the policy-making process and the interchange of managerial personnel of Sandy Berhad because at least one from A to E is required to show the existence of significant influence. Plankton has significant influence in Sandy Berhad since it has met 2 out of 5 criteria of significant influence. Under MFRS 128, if an entity holds 20% or more of the outstanding shares of corporation, the entity has a significant influence on the entity. Significant influence is the evidence that the entity has the power to participate in meetings and has the voice to be heard. MFRS 128 requires investment in associate be accounted using the equity method. Therefore, Sandy Berhad is an associate company of Plankton Berhad.